Are you on the hunt for some of the most lucrative cash flows and yields in the investment world? If so, you're likely familiar with YieldMax ETFs, renowned for their impressive cash flow generation. Today, we're going to dissect and analyze two prominent YieldMax ETFs offered by YieldMax TSLY and OARK. And stick with us till the end. We've got a special surprise in store loaded with extra insights that you won't want to miss. Welcome back to Dividend and Conquer, the channel where we make complex investment strategies easy to understand. Today, let's unravel the mystery behind YieldMax 2023, focusing on two specific ETFs out of the 18 available. But first, let's have a brief overview for those new to YieldMax ETFs. Let's dive into the details. Imagine you're looking at TSLY and OARK, which shadow the TSLY and OARK ETFs, respectively. How do these function? And more importantly, how have they fared this year? The real question is, how do they stack up against owning the actual stocks? These ETFs operate uniquely through a strategy involving synthetic covered calls. It's like owning the stock without actually holding it. Intrigued? Let's break it down. Consider a hypothetical situation. Owning 100 shares of Tesla would traditionally require a hefty investment. But YieldMax ETFs create a similar exposure using a combination of put and call options. It's a fascinating blend of risk and reward, balancing potential gains with possible losses, all without the substantial upfront investment of actual share ownership. And hey, if you're finding this video helpful, don't forget to hit that subscribe button. We're here to help you conquer the world of dividends. Moving to the numbers, how much dividend income could these ETFs generate? And how does that translate into real investment terms? Let's crunch some numbers and see how much you'd need to invest in these ETFs to rake in, say, a yearly income of $50,000. The results might surprise you. When comparing these ETFs with their underlying stocks, the narrative takes an intriguing turn. While they may not always outperform the stocks in terms of price, the dividend income is a game changer. But as an investor, you must weigh the balance between potential capital growth and regular income. As promised, here's our special surprise. We've included some additional data on high-yield covered call ETFs, addressing some questions raised by our community. How do these ETFs fare against others in the market? The findings are quite revealing. Remember, your insights are invaluable to us. Drop your thoughts in the comments below. We love engaging with our community. Now let's delve deeper into the mechanics of these intriguing investment vehicles. Imagine the traditional investment route purchasing shares directly. It's straightforward but requires significant capital, especially for high-value stocks like Tesla. YieldMax ETFs offer an alternative path. They use a blend of put and call options to mimic owning the stock. The beauty of this approach lies in its flexibility and reduced capital requirement. Consider this. To own 100 shares of a high-value stock, you might need tens of thousands of dollars. YieldMax ETFs, however, use options trading to simulate this ownership. This strategy involves writing covered calls and selling put options. The call options allow investors to benefit from stock price increases, while put options protect against significant losses. It's a balancing act that these ETFs perform remarkably well. But how does this translate into actual returns? Let's take a closer look at the performance of TSLY and OARK. In a hypothetical scenario, investing in TSLY could have turned a $50,000 investment into a much larger sum by the end of the year, thanks to its strategy of balancing options trading with stock performance. OARK, tracking the OARK ETF, shows a similar trend, although with different numbers. The key takeaway here is the significant income generated through dividends, a feature particularly attractive to investors seeking regular income streams. To give you a clearer picture, let's talk numbers. Imagine you invested $50,000 in TSLY at the start of the year. By year-end, not only would your investment have grown in value, but you would have also received substantial dividend income. The same goes for OARK. These numbers starkly contrast with the potential returns from a direct investment in the underlying stocks. But it's not just about the returns. The risk factor plays a crucial role. While these ETFs provide exposure to high-value stocks, they also cap potential gains and limit losses through their option strategy. It's a trade-off between high potential returns and a safety net against market volatility. Another aspect worth discussing is the expense ratio of these ETFs. With a 0.99% expense ratio, some investors might wonder if it's better to replicate these strategies independently. This is a valid consideration, especially for seasoned investors comfortable with options trading. However, for the average investor, YieldMax ETFs offer a simpler, more accessible way to tap into this strategy without the complexity of individual options trading. Now, let's compare these ETFs to other high-yield covered call ETFs. When lined up against peers, TSLY and OARK stand out for their high dividend yields. But it's crucial to understand that high yield often comes with higher risk. These ETFs are not immune to market fluctuations, and their performance is closely tied to the underlying stocks. Hence, while they are lucrative, they also require careful consideration and risk assessment. In light of these insights, it's evident that YieldMax ETFs offer a unique proposition. They provide an entry point into high-value stock markets with a reduced capital requirement and a strategy focused on income generation through dividends. But as with any investment, it's essential to weigh the potential risks against the rewards. In conclusion, YieldMax ETFs present an exciting opportunity for investors looking to diversify their portfolios and tap into the potential of high-value stocks through a more accessible and income-focused approach. What are your thoughts on these ETFs? Are they part of your investment strategy? Let us know in the comments below. And there you have it, folks, a comprehensive look at YieldMax ETFs. If you found this video insightful and want to stay updated on the latest investment trends, make sure to like, subscribe, and turn on notifications for Dividend and Conquer. Until next time, keep conquering the world of dividends. Remember, we are not financial advisors, and the content presented in this video is for informational and educational purposes only. Always consult with a licensed financial professional before making any investment decisions.